Jeremy, Circle and other stablecoin issuers have really been some of the beneficiaries of the higher interest rate environment of the last couple of years. You take the reserves that back the stablecoin and put it in treasuries and get a yield that is much higher than we would have ever guessed it would have been, 5-10 years ago. But I'm curious how now with everyone expecting the Federal Reserve to start cutting rates, Treasury yields coming down, does it affect your allocation strategy with what you do with the funds backing USDC?
Well, in terms of the actual reserve strategy, we're bound by law as an electronic money issuer, and we're also bound by specific prudential regulations of stablecoins. And so we have to stay inside that, which basically means 90-day or less, or sort of three-month T-bills, over collateralized treasury repos and cash. And so USDC is a cash equivalent instrument, and that's really important. It needs to stay that way. And so we're always going to be bound by that kind of prudential regulatory framework. We're now bound by European regulations that require a set of constraints on reserves of stablecoins. We really think that's critical, that you have this digital cash instrument that people can depend on. In terms of the interest rate environment, our view is in some ways consistent with kind of monetary theory, and I think often even how banks think about this, which is, yes, in a higher interest rate environment, there's less sort of money velocity, there's less money moving in the economy, people park it on the sidelines, et cetera. But in a lower interest rate environment, there's higher money velocity, there's more demand for money, and money moves more freely. And we believe that we have created with USDC the highest utility value money in the world, and that will become even more evident over time. And so as you see maybe a more neutral interest rate environment, we actually think that that's a tremendous backdrop to expanding the utility of stablecoins, growing this from the roughly $150 billion of dollar stablecoin in circulation to what I believe over time can be trillions of dollars of value held in these digital cash instruments. So we see growth coming from a more moderate interest rate environment, and really we're focused on building out the largest, most widely used stablecoin network in the world, and we think that is going to be supported by a more moderate interest rate environment.
Jeremy, back in January, you said you confidentially submitted plans for an initial public offering. This has been a long-awaited listing when it comes to Circle. What can you tell us about your plans to go public and how soon you think it can get done? Do you have to wait until after an election cycle?
Well, a couple things. First, I can't comment on any specific regulatory engagements that we have, whether it's on that or any other matter. What I can say is we are absolutely committed to being a global publicly traded company listed on American stock exchanges. We've built our reputation around trust and transparency and accountability. It's one of the kind of critical things that has made Circle successful, made USDC successful, and we believe that being a publicly listed company under a U.S. kind of capital market structure is going to add to that trust, transparency, accountability, governance. Those are really critical things. If you're facing USDC, you're facing Circle, and we think that's a critical building block. So we're very, very committed to that.